Good morning. This is Larry McMillan with the stock market update on Monday, September 19th, before the market opens. So last week, S&P did break down below 3,900, which adds to the bearishness of the entire picture. We're still in a bear market. The SPX is still in the downtrend. The breaking of 3,900 is significant. There will probably be a test at 3,800. And then the lows at 36, 37 come into question. Of course, a close below the yearly lows at that level would be very negative. In any case, let's go over the other indicators. We still do have a McMillan volatility band buy signal. That will not be stopped out unless SPX closes below the -4 sigma band. That doesn't look like that's going to happen anytime soon. That band is way down at like 37.80. The equity-only put-call ratios remain on sell signals, and now they're rising quite strongly. They're getting near their highs of the year, which makes them oversold, but they won't be on a buy signal until they roll over and begin to decline. The breadth indicators are bearish. Both breadth oscillators are on sell signals, and they're in deeply oversold territory. Not as deep as it was in June, but still pretty deep, deeply oversold. So one day of positive breadth is not going to be enough to reverse these indicators, which are currently bearish. One small ray of positiveness is the total put-call ratio, which registered an extreme negative reading on Friday, which is usually an oversold condition that's strong enough to give a one-day buy signal. I caution that a little bit because as I'm recording this, the S&P futures are down 40 points overnight. So if you like that buy signal, this would be a good place to get in on, I guess. In any case, new highs versus new lows, that remains negative. Only 13 new highs on the New York Stock Exchange on Friday. And that brings us to VIX, which has been the indicator that's been trying to give buy signals. VIX is in spiking mode right now, and if it were to close more than 3 points below its high, which I believe was Friday's high, that would be another buy signal. However, on an intermediate term basis, the 20-day moving average of VIX is increasing rapidly now and is about to cross over the 200-day. If that happens, a new intermediate term sell signal would be in effect. So these short-term VIX spike peak buy signals have not been working out too well lately. The trend signal will probably be a little bit stronger than not. The construct of volatility derivatives remains modestly positive in that the term structure of the futures, VIX futures, continues to slope upwards. That's a situation that could change. Some people think a move to the new lows might create a volatility explosion, similar to what we had in October of 2008 or April of 2020. Of course, if that happens, that won't be good for the market, but it would be good for spread and arbitrage traders and volatility. So overall, right now, the picture is still negative. We're maintaining a core bearish position. If we do get oversold buy signals, we will trade those around that core position. Meanwhile, I invite you to visit our website, take a look at our newsletters that come out daily where we can keep you up to date on these things in a more timely manner. And meanwhile, have a great week trading.